Oh my gosh, the real estate market is insane. What's up everybody? My name's Jake Fletcher. I'm a realtor in Miami, Florida, and in this video, I'm gonna be giving you guys my expert tips for how to buy a home in 2021, what to expect in the market, and how to get your offer accepted without putting yourself at risk. Before I lay it all out there for you guys and give you my expert tips from somebody who is consistently day in and day out working with buyers in this market, do me a little favor and
obliterate that like button, smash the subscribe button,
gently ring the notification bell,
and then fervently share this video with anyone you know who might be looking to buy a home in 2021. All right, so let's take a look at these graphs in this inventory situation. And I'm gonna make this part quick because this isn't meant to be like a statistical data analysis or market update video. But basically what we can see, and we're looking at Miami-Dade County because that's the market I'm in, but these trends actually are echoed throughout the country right now and everywhere in the country for the most part, especially major metropolitan areas, are experiencing a lack of inventory, okay? So what we're seeing here is this was really when things took hold in the pandemic of last year. A lot less people started listing their house for sale during that time. And then the trend line here in 2020, overall, on average, was lower than what we saw in 2019. Plus, what we saw in 2019 was already, if we look at this green line of number of total active listings, already was trending downwards in the year before the pandemic. And then when the pandemic hit, that trend went extreme, okay? Now, the reason why is because we've had, and we'll look at this in a second, we've had similar demand, almost the same amount of demand and same amount of number of closings, and maybe even potentially more demand as interest rates have sunk to record lows throughout last year and continue to remain low. So we've seen a severe lack of number of new listings while demand has remained constant or even greater. So what happens when you have less and less supply but more and more demand? You have an increase in sales price and basically things get a lot more competitive. Now, just so that you guys can see that this isn't just Miami-Dade, that it isn't just single family homes, this is condos and townhomes as well. You see it's a pretty similar graph. There's a little bit less of a decrease over the total number of active listings. So there's more people looking, there's more people looking to put their condos for sale, right? You can see that. But the trend of the consistently less and less new listings in condos and townhomes and single family homes together still is a negative trend. It's still less than the prior year, and it's still resulting in a lack of supply with similar demand and increased prices, okay? So let's look at those increased prices. So now we're back to single family homes in Miami-Dade, and the red line is our average sale price. And what I did was I did $1 million and less, because if you include homes that are over $1 million, the line gets very skewed, and it looks like the average sale price is $550,000, which doesn't really represent the vast majority of sales happening, just because there's some ultra high priced homes in the Miami-Dade market. So what we can see is since January of 2019, we've seen that average sale price go from about $375 to basically about $450, okay? Now, this is just, it's a crazy increase, right? And the reason why we couple this information with knowing that the inventory is really low with the number of sales, okay? So this blue or purple line is the number of sales here. We can see, it goes up and down. It traces back and forth throughout the different months because generally the summer months are a little bit higher activity. You can see here in July, even in the middle of the pandemic, we got up even higher than July of 2019. But therefore, looking at the April and March figures of 2019, we see they were opposite, right? So we see what a big impact that pandemic had compared to this kind of April, May of 2019 to the April, May of 2020, right? So it kind of flipped there for a second because everybody was like scrambling for toilet paper and all that stuff, right? But then the number of sales actually shot back up. It remained pretty consistent. Normal for it to kind of go down in October. We see that reflected there as well, but it was still higher than 2019, right? So that speaks to the argument that because of interest rates being so low, the demand actually rose a bit, right? Or other factors as well, but in my opinion, primarily interest rates being very low, a lot of people were trying to take advantage of that and still are. So then we have kind of this November spike here that was even higher than November of last year. And then January of 2019, I say last year, I mean 2019, even though it's 2021 right now. Then we see this January decrease, right, that's reflected here. Our January decrease went even lower. Now this, in my opinion, it's not the most statistically significant in number of actual sales. We're talking about a difference of about 50 or so sales, okay, between here and there. It's significant, but it's not like you're not writing home to tell anyone about that necessarily, but it is a data point, right? So we've seen that number of sales go down a bit, but now it's starting to go back up in February. Again, it's normal for number of sales to be less in January and February simply because, it's not the most popular time of the year for people to move, okay? Now, this is the data that I wanted to talk about with you guys so you have an understanding of what's going on in the market. And again, these trends are going to be consistent throughout most of the United States. Awesome. Now that we got all the stats out of the way, let me give you guys a little bit of some advice on what to expect, and then we'll get into how to get your offer accepted without putting yourself at risk, okay? Now, the things I want to advise you on what to expect. Like we know, then we just covered, inventory is super low. So as a result of inventory being low and there not being as many options to choose from, it'll really benefit you to sort of use your imagination when you go into places and see the possibilities of a house versus focusing on the limitations, so to speak. So you want to look at things like, is the structure sound? Does the floor plan work for you? Is there enough space for you and your family? Do you like the neighborhood, et cetera, versus cosmetic things that can be fixed, right? So don't let the fact that there's like a little chipped piece of paint somewhere, or maybe you don't like the color of the gate or something like that, little cosmetic things that can be fixed. Don't let those things trip you up on purchasing a house that otherwise is great for your family, okay? Now, the next thing I want to advise is to be patient, okay? Because there's little inventory out there, it might take you a while to find something that does work for your family. I can attest to the fact that I've worked with tons of buyers where we get to the point where the buyer is like, man, maybe it's just not the time for me to buy. And then the very next time that we go out, they find a property that they love, go under contract and purchase, okay? So if it's time to buy, be patient, keep at it. Eventually you'll find the property that works for you. Now, on that note, since there's very little inventory out there, if you're looking for something that is turnkey, so to speak, like Instagram ready or Airbnb-able, you're going to pay a premium for that, okay? So I say that because you should be expecting to basically write your offers with that in mind, okay? So if you're looking for turnkey, get ready to pay a premium for that. If you're looking for something that has a little bit of cosmetic damage, you may still be paying over list price, but maybe not quite as much competition for those as there are for the ones that are totally updated and renovated and, really beautiful and brand new and et cetera, right? It's actually in your benefit if you can deal with a little bit of like some paint needs to get done, or, maybe you don't like the shower doors or something like that, minor repairs and things, maintenance and upgrades and stuff that it might be better to shoot for a property like that if you're a little tighter on your budget right now. The next thing I want to advise you guys is, since you're going to be paying a premium essentially or going over list price for most single family homes right now, you really, really, really want to be super ready, okay? There's a lot of competition out there, so make sure you talk to your lender and your realtor, get all your documents into your lender so that they can go ahead and give you the pre-approval letter, get all the information to your realtor that they need from you and all your criteria, narrow down exactly what it is that you're looking for, and be very intentional intentional about your search. And that way, once you find the property that you're wanting to put an offer on, you already have everything in line with your lender and you can go ahead and submit an offer that day. I can tell you right now, if you don't have a pre-approval letter and you don't have all the docs to your lender and you're writing an offer on a house that day, you're not gonna get that house. You're wasting your time. You're wasting everybody's time. So don't waste your time. Your time is valuable. Have everything ready. Be super, super prepared, okay? Now, since you're potentially going to be offering more than the asking price for properties, you wanna make sure to talk to your lender about working that into your math, making sure it works for your finances, making sure you have the down payment ready for it and all the closing costs and everything that you're gonna need to close on that house at that higher price. So make sure the math works, talk to your realtor, talk to your lender especially, okay? Next up, I wanna very highly encourage you guys to use a great realtor, okay? Don't just use any old schlub off the street. Use somebody who is tried, tested, and true and knows what they're doing, who's been consistently selling houses over the last few months, 6 months or so, because things have changed, okay? If you're working with a realtor who hasn't done very many sales in the last year, they really don't know what's happening out there in the market right now and basically how to protect your interests in the best way possible, okay? A realtor is going to be able to convey to the listing agent who represents the seller what a qualified buyer you are. You know, boom, they got so much down payment, their debt to income ratio is super low, they're very flexible with their move-in, et cetera, right? So they want to convey to the listing agent how qualified you are, what a sure thing you are that you're going to close this loan, okay? Now, a realtor can also feel out from the listing agent what the motivations of the seller is, what the motivations are, because let's say that they want a longer closing period because they're older people and it's going to take them longer to pack up and they're not even really sure exactly where they're going yet. If you're flexible to have a later move-in date and a longer closing period, your realtor can let the listing agent know that, right? So that makes your offer automatically more attractive because your agent can put that into the offer, okay? Now, another thing that an agent can do is they can request to present the offer in person to the seller. It's a little tougher to do in COVID times, admittedly, right? But, you know, over a Zoom call or, you know, something like that, they can basically present with the listing agent and the seller on and present the terms of the deal to the seller and kind of gauge if they're like iffy about having a 10-day or 15-day inspection period and they know that you're okay with doing a 7-day inspection. Boom, yeah, cool, they're fine with that. Squash that objection right up front, okay? So super important. Now, another thing that you can do is you can write a letter to the seller, okay? You can't really write a letter to the seller, like they used to write love letters to the seller, basically trying to pull on all their heartstrings of, oh, you know, my family needs this because of X, Y, and Z, and this. That kind of violates it does violate fair housing laws apparently nowadays, but what you can do is write a letter about what you love about the house, the upgrades the seller has done, what you love about the neighborhood, and why you can see your family living there, okay? So it's a fine line to tread. Your realtor, if they're a good realtor, can help you tread that line. Now, traditionally, sellers are most concerned about the price of the property. What's that selling price? What's going to be their net in their pocket, right? But since there's so much competition out there and inventory is low and people are coming in over asking price, there are some things that people are doing with their offers, buyers are doing, and even their realtors are, I guess, suggesting them to do these things, even though it's not in their best interest, that I do not recommend that you guys do, okay? So you do want to make your offer competitive, but to a point. Like I said at the beginning, you want to make your offer get accepted without putting yourself at risk, okay? So two of these things that people are doing that I don't recommend are waiving inspections and waiving appraisals, which means that you don't have an inspection period and you don't have an appraisal, okay? I probably don't need to explain to you much why you should do an inspection. What if there's something wrong with the roof and you don't know it? You just bought this house, now you have to put a $40,000 roof on the house, right? So make sure, do not concede on having an inspection. You have the right as a buyer to do that. If the seller of the house that you're trying to buy doesn't want to have an inspection period, move on to another house. It's not worth it. It's just not. Next up, do not concede on getting an appraisal done. Well, if you're getting a loan, the appraisal is going to have to happen anyways, but what people are doing is they're waiving the appraisal, meaning that if the house appraises super low, whatever that amount is, they're going to bring it in cash to the closing, okay? Now, this is not a good strategy, because what if there's something monumentally wrong with the house, or there's liens or violations, or let's say that there's environmental situation where they did a soil sample particularly, and there's something crazy wrong with it, and now all of a sudden the bank isn't going to give you as much of a loan on that property as you originally hoped that it would. If it's a $400,000 property and now it appraises at, say, 350, and you were going to bring in a down payment of $20,000, right, on that 400, then there's a $30,000 gap there now that somebody's going to have to come up with. And in this market, that's such a strong seller's market, I got news for you. It's going to be the buyer, right? Because there's 200 other buyers lined up at the open house ready to pay whatever the heck that seller wants, right? So what I recommend, instead of waiving the appraisal altogether, is doing what's called an appraisal contingency. So what I recommend doing, instead of waiving that appraisal altogether, is what's called an appraisal differential, okay? What that's going to do is basically, we'll take that same example of a $400,000 house. Let's say you're coming in at 425, right? Because you're going to have to come in over list price, like we mentioned. If that house appraises for 400, there's a $25,000 gap there, right? So if you can do it, if you can afford to bring that extra $25,000 in cash or cleared funds to the closing, in addition to the other $20,000 that you were going to bring for the down payment, and in addition to the closing costs, if you can afford to do that, an appraisal differential is a great route to go, okay? Make sure that you check with your math and, your bank account to make sure that, how much you can afford. If you can afford even more and you say, well, hey, it could even appraise as low as 385, right? Then you're willing to bring an extra $40,000 in cash plus the 20 of the down payment plus the closing costs. Now, again, this is only if you can afford this, obviously. If you don't have the cash, don't go this route. But this is a way to make your offer much more attractive to a seller without putting yourself at more risk than you're willing to bear. That's the important key part. Another thing I could recommend to anyone who's looking to do an FHA first-time homebuyer program, which is traditionally a 3.5% down payment, is check with your lender to see if you can qualify for a conventional loan for 5% down, okay? Now, there's a lot of benefits to this for you as a buyer, and it makes you look more attractive to a seller, because there's a general misconception from people that FHA buyers are not as good as conventional buyers. And the reason why they think that is there's a couple things that are based in fact, but a lot of it is fiction. But basically, with an FHA appraisal, the loan appraisal amount sticks with the house for 120 days. It's not the case with conventional loans. That means that basically, if it appraises low, then when that deal falls through, if it falls through, they have to go back on the market and disclose that lower appraised amount to anyone who is potentially wanting to buy that house now. Another thing too is conventional borrowers typically basically have better credit scores because it requires a better credit score to be qualified for conventional loan, and it requires lower debt to income ratio. So you're going to get a better rate as well with conventional loans, and you're going to also not have to pay private mortgage insurance for the life of the loan. It's only up to 78% LTV, which is the loan to value ratio. Whereas with FHA loans, you're going to pay that private mortgage insurance for the life of the loan, which could be an extra $100, $200, $300 a month potentially. So check with your lender to see if you can qualify for a conventional loan, 5% down. It's only an extra 1.5% plus closing costs, of course, as always with any type of loan. But if you can qualify for it and you can afford it, it could make your offer look more attractive to a seller, okay? Now, there are lots of sellers who will work with FHA. So if you're in the FHA boat and that's the loan for you, don't be discouraged by this. There's a lot of sellers, especially if they once went FHA first-time home buyer, where they'll kind of have a soft spot for you. So there are sellers that will understand and work with FHA, but there is enough of a misconception that it might be worth it to see if you can go conventional, and it's a benefit to you in the long run anyways, right? So yes, it's 1.5% more down, but if you can afford it, it might be worth it to check it out and speak with your lender and see if it could work for you, all right? Now, the last little bit of advice that I'm going to give to you guys is for anyone who was watching this video, not really sure if now is the time to buy for them, okay? The answer is yes, it is. And the reason why is because if you're one of these people waiting to buy because you're waiting for a real estate crash, don't hold your breath, okay? Inventory is going to continue to remain low. There's actually a stat that I heard, I think it was from the National Association of Home Builders, where the United States real estate market could absorb 500,000 new units without prices going down at all, okay? So that's incredible to think about. And at the end of the day, your real estate over the long period of time, 100% of the time is going to increase in value, okay? But what you can't get back is the opportunity cost lost of the time you spent still paying rent, throwing your money into the trash bin of rent and lighting it on fire in a blazing inferno and not building your wealth, okay? Go ahead and buy that real estate, and instead of waiting for some perceived crash, which is not gonna happen, if anything, it's just gonna be a correction of at max like 5%. If the price is corrected 10%, I would be astounded. You're gonna save $10,000, $20,000, but at the end of the day, it's just not worth it. Start building your wealth now, buy that real estate now, and you're gonna be much better off because you can use the benefits of owning real estate to grow your wealth, essentially, okay? So that's it for this video. If you guys found it helpful and enjoyed this video, please go ahead and obliterate the like button, the subscribe, share this video with someone looking to buy a house in 2021, and I'll catch you on the next one. Thanks. Peace.
Hey.